Nike is our new market analysis. Nike is a U.S. multinational that manufactures footwear, clothing, and sports accessories. Created in 1971, it is headquartered in Beaverton, United States. The market has seen investors walk on thin ice in recent months. With record levels of inflation, rising interest rates, and concerns involving Russia and Ukraine, growth stocks have come under enormous pressure lately. It is very common for investors to switch from speculative investments to safer assets during times of uncertainty, which is exactly what is happening today. It would not be foolish to consider for the moment to turn to more established companies. Companies like Nike offer investors much-needed security in today's precarious economic environment. Nike, which is perhaps the most recognizable retail brand in the world, possesses many favorable features for a long-term investment portfolio. Although there are many reasons to appreciate the major retailer, here are 3 valid reasons to buy Nike today and keep it for the next 5 to 10 years. 1. A world-class retail moat. Nike's moat in the sportswear market is unrivaled. In 2021, Nike generated sales of $44.5 billion compared to major competitors Lululemon Athletica, Adidas, and Under Armour, which reported revenues of $6.3 billion, $21.2 billion, and $5.7 billion, respectively. The company dominates nearly 50% of the U.S. sports footwear market and about a third of the entire sportswear industry. With the forecast that the sportswear market will generate $270 billion in annual sales by 2028, Nike is in a prime position to sustain solid growth in the years to come. In addition, the list of sponsors of the company's athletes is unrivaled. From Michael Jordan, LeBron James, and Serena Williams to Tiger Woods, Rafael Nadal, and Cristiano Ronaldo, Nike comes with a portfolio of the world's most influential athletic figures. Pair that with the company's "Just Do It" slogan, and it's safe to say that Nike's economic moat is as durable as few companies in the world. 2. Consistent numbers day after day. Even when investors expect the worst, Nike seems to be delivering great results. The company has recently fought several obstacles related to the closure of factories due to the pandemic and sales growth in the greater region of China. Even so, Nike still managed to report revenue of $10.9 billion and earnings per share of $0.87 per share in its most recent quarter, beating consensus estimates of 2.47% and 21%, respectively. The results surprised many investors as Nike's sales in China, which account for a solid chunk of its business, fell 8% in the quarter. Nike's beauty is its broad and diverse global portfolio. This allows the company to succeed over and over again, even if some segments of the company experience substandard performance. Especially in today's volatile market, investors should be very pleased with Nike's ability to meet challenges and deliver great results on the financial front. 3. Perpetual Innovation. One of Nike's underrated strengths is its ability to evolve with the consumer over time. The company is not afraid to challenge the status quo and think outside the box. In a world that is becoming increasingly electronic, Nike's digital sales continue to skyrocket. In the third quarter, Nike brand digital sales increased 22% year-over-year, largely driven by a 33% increase in the North America region. The Nike mobile app also grew more than 50% in the third quarter, surpassing Nike.com as the company's highest share of digital demand. Nike continues to break barriers and enter new markets, such as the metaverse. In late 2021, the company bought RTFKT Studios, a non-fungible token (NFT) company focused on creating virtual shoes. Although the NFT market is still in its infancy, the acquisition shows that Nike is perfectly willing to adapt to consumer demands and experiment with new cutting-edge technologies. Ultimately, in today's market, Nike is a great investment choice. The sportswear giant has seen its share price depreciate by 35.36% since the beginning of the year, and as a result, although it cannot be said that the stock is strongly discounted, it is still cheap. Today, Nike is trading at 28.13 times earnings, representing a 34% discount to the multiple of 43 in the 5-year average price-to-earnings ratio.